Let's get another check on Interactive Brokers. It's about even, slightly higher right now and over time after beating estimates on the top and bottom lines. Joining us now for an exclusive interview is Thomas Peterffy, founder and chairman at Interactive Brokers. Thomas, good to see you. So tell me, how much did higher rates actually help when I'm looking at net interest income here, and also customers' willingness to get out there in risk and do some margin trading?
Well, we had a terrific quarter. Our revenues are all-time high, over $1.2 billion, and our pre-tax profits are also at all-time high at $879 million as adjusted. It's up 22% year on year, and our pre-tax profit margins were 72%, which is quite high in the industry. It's probably the highest. So the earnings were $1.61 a share, adjusted at 1.64 cents, and so it was a fantastic quarter. As far as commission revenues, they were increased by 7%, and interest revenues, as you said, increased by 17%. So it's been a great quarter.
Yeah, but then specifically on the customer margin loans, the credit balances, what sort of behavior are you seeing from your customers when it comes to risk in these markets where people seem to be excited about the continuing strength in the economy and what that suggests for equities?
Yeah, so margin loans, you may think of this as a warning sign. Margin loans were up 30% at $51.2 billion, which is an all-time high. And that usually is, it usually foretells a market that is going to slow down. And so that's what we're probably going to be seeing. Average number of trades were 2.35 million trades a day, which is very high. And customer accounts grew at 25%. And customer equity goes up 36%. But that is, of course, at the end of the quarter. So since that time, we have seen a downturn in the market. So these numbers right now would be somewhat lower.
Okay. That's kind of exactly where I was going to go with you, Thomas. And that is the fact that you saw 25% growth in customer accounts. And you've seen strong growth for recent quarters in general. So I do wonder how sustainable it is at these levels.
Yeah, but I'm not saying that customer account growth is going to go down. It probably will not. But as far as account equity, that fluctuates with the market. Mm-hmm. And margin loans usually go down, although this time, even though the market has been down for several days this week and last week, margin loans hasn't really come down much, just barely.
How are you thinking about the portfolio? I know you recently rolled out this high-touch prime brokerage and global outsourced trading. You've been expanding your product offerings in general. You've also in the past talked about being acquisitive and the possibility of M&A. Is that still on the table?
Well, that is on the table, but, we don't see anything at a reasonable price yet. But should the market really go down, I think opportunities will emerge. So if you have a lot of cash on your hands, that's always a good situation to be in.
I want to go back to what you said about this level of margin trading being a bit toppy. How does this compare to what we saw a couple years ago when the market was a bit toppy? Why do you think? What are the other signals that you're seeing that suggest to you that we might be in for a breather or a sustained dip in what equities do?
So I generally get the feeling that the market is somewhat exhausted. Margin loans keep rising, and that's never a bullish sign. And we saw that 2 years ago. Margin loans hit a high, an all-time high, right before the market collapsed. So all right. That's a possibility. Although I think that on the long run, the market is going to rise because I think inflation is going to rise. And I don't think interest rates will come down much. They may come down a little bit. but I think 5% looking forward is probably a good guess.
So no landing camp, it sounds like you're in?
That's right.
Okay.
Definitely.